Hey, good morning. So today I've got 3 easy tips for you to save thousands on your mortgage payments. And this is primarily for homeowners, but it's also for those that are interested in buying a home. And it is preparation for you looking at buying a home and getting financed for it. And those 3 tips are to save on private mortgage insurance. It's also known as PMI. You will frequently hear people say, I'm going to put 20% down as a down payment in order to avoid paying PMI, which is a separate charge that you get charged by the mortgage lender in order to insure your loan, right? If you put less than 20% down, they see that as higher risk. Well, there are ways that you can avoid this even if you don't have a 20% down payment. So this is probably more advantageous for those looking at buying a home that don't have that kind of money. Maybe you are lower income, or maybe you're buying in a more expensive place. And these 3 tips are the following. First, look at bank initiatives. There are bank initiatives that can provide you a loan with less than 20% down. We'll talk about that in a minute. Also, you want to look at the VA loan. This is primarily for military, but it's also for veterans too. And I'm going to talk about that in some detail as well. And then finally, you can also have your lender pay the mortgage insurance for you. So let's talk about each of these in a little bit more detail. First, bank initiatives. So I'm going to mention 1 or 2 here, but I'm not endorsing these. I'm not affiliated with them in any way. An example is Citibank offers what they call the Home Run Mortgage Program. And so that you can put less than 20% down as a down payment on a home, and you don't have to pay private mortgage insurance, so you don't have to pay that PMI. Now, there are some prerequisites, like you have to go through some educating about home ownership ahead of time. There's some other prerequisites you have to meet. But this could be a way for you in order to avoid that, right? Because that PMI can be very pricey, it can be very expensive, especially if it's spread over a long period of time, and it's not tax deductible. So those are very important things to keep in mind. The second that I mentioned is the VA loan. And the VA loan is primarily for active duty military and for veterans. And this will enable you to do 100% financing, and you don't have to pay PMI. Now, you do have to pay a VA loan funding fee, but if you're at least 10% disabled, you can get that funding fee waived. So that's another option for you. And then finally, you can get what's known as lender paid mortgage insurance. So this means that the actual lender will pay the mortgage insurance for you. Usually this involves them charging you a little bit higher interest rate. So for instance, when I bought my home in Washington, D.C., I was going to be able to get a 3% mortgage rate at the time, but they charged me 3 3/8. So they charged me like 3/8 of a percentage point higher in order to cover the mortgage insurance. Now, that is a little bit more money, but it's not as much as PMI would be. So that was a way I was able to save. And you can do that too. So if you're looking to buy, talk to your lender and see if they can get lender paid mortgage insurance and do a comparison to see, hey, is that worth paying for? Is it worth it? Am I going to save more money that way? Or would it be better for me to do a 20% down payment or do one of these other programs that banks offer? Please post a question or comment. Send me a private message if you want to talk about it privately. I always enjoy reading your comments. And until next time, I wish you unlimited success.